Hello and welcome to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and joining me my colleague Yatin Mota. Well, Yatin, quite a traumatic Tuesday, so to say, because we are feeling the tariff jitters, and that has unnerved investors and brought on the risk-off sentiment. Sensex closed with about 1350 points lower, and Nifty is also closed below that 23,200 levels. We did start lower, but we were anticipating some recovery after that. But then again, after 10 a.m., deep cuts have prevailed in the headline indices. Nifty did reach a low of 23,136, and now all the support lies on 23,102. Now today, three major drags. Nifty Realty Index down about 3%, one of the top sectoral underperformers, especially by some Maharashtra-based realty names saw the drag on the sentiment, like for instance your Godrej Properties, Macrotech Developers, all of them down up to 3% as Maharashtra increased its ready reckoner rates. So that was a negative for the real estate companies. Second is your Nifty IT Index. Well, not much of a surprise given investors have grown cautious towards export-oriented themes before Trump lays out its tariff plans. So Nifty Pharma, Nifty IT, both of them facing the heat at this point of time. Third, of course, Bank Nifty Index closing with about 1.4% cut, led by weakness in index heavyweights, for instance your HDFC Bank, ICICI Bank and SBI. So yes, Yatin, anytime we have an unknown risk in the market, there's a cautiousness that prevails. So today is also not much of a surprise that came in.
Yes, I think the markets are really waiting and watching for the Trump tariffs, and the clarity will emerge tomorrow post the market hours. Yes, you are right in saying that the market was expected to recover in intraday trade because we had the Dow futures, the European markets which were recovering after the Monday shock. However, if you look at the markets intraday, we started the day with almost a 200 points cut. We recovered that 200 point loss, and then again we fell from that level to almost close 350 points lower. So yes, I think frontline stocks, especially from the pharma and IT pack, led the entire fall. It needs to be seen what kind of a selling is done by the FIIs, because I think those desks were aggressively sellers in the trade today. But clearly for the week or for the financial year 26, the biggest event would be how really Trump's tariff shocked the world, especially emerging markets, and how India escapes those Trump tantrums is something that we'll be watching out for.
That's right. It was a stock pickers market also, because there was certain stock specific action that prevailed today. If you look at the advance decline ratio also, advances took a upper hand, 2:1 ratio. But yes, some of the top gainers on the Nifty 50, that includes the likes of IndusInd Bank with about 5% gains. There are certain reports of top lenders which are expected to acquire 10,000 crore corporate loan portfolio. So IndusInd Bank could be reacting to that news too. Trent, 1,000 plus stores. We'll be discussing the stock in detail too. 4% gains coming in. Bajaj Autos, Geo Financial, the new Nifty 50 entrant with about 1.2% gains too, doing well. On the other hand, some of the tech names dominated the pack. HCL Tech seeing a cut of about 3%, Infosys with about 2.8%, Bajaj Finserv, some of the NBFCs, and of course the financial stocks did take a hit, with about HDFC Bank with about 3% cuts, Bajaj Finserv with about 3.5% cut. Shriram Finance also not doing well with about 2.8% cut. But on the broader end of the market, small caps did end flat in the green. However, mid caps saw severe cuts with about 1% at this point of time. Yatin, why don't you take us through some of the top gainers and losers?
So yes, if you look at the mid-cap end of the market, HBL Engineering, they won coverage orders of almost 750 crores from the Indian Railways. These are safety standards which needs to get implemented. And HBL Power, after that big order, moved almost 8% in trade. Remember, HBL Engineering also supplies to various battery products to Hindustan Aeronautics, and obviously because Hindustan Aeronautics got few orders, probably that stock again remains in focus. We have stocks like SW Solar, Lemon Tree, as well as Maharashtra Seamless gaining anywhere between 5 to 7%. What was not doing well is the likes of UCO Bank, down 12%. Voltas, and that was a big negative surprise. Stock was down 8%. Obviously no particular reasons, but despite the fact that we will possibly see a heat wave, the stock has tanked in trade. Similar is the case with Ipca Laboratories, down 7%, and Suven Pharma also facing some profit taking, down 7% in trade.
That's right. But let's break down some of the stocks that did grab limelight in today's trading session. Well, first is your Vodafone India Idea. The stock was the street stocking point today, and the stock rose up to 20% after the government decided to convert its spectrum dues into equity. So hereby it increases its stake to 49% from current 22.6%. Now this conversion will occur at 10 rupees per share, which is at 40% premium to the stock price too. And the existing promoters of Vodafone India will continue to have an operational control, but with a modest 25.5% stake after the equity conversion. Now what analysts at Citi believe is that this government's display of support can provide significant cash flow relief to Vodafone Idea in the next 3 years and help it complete its bank debt raise too. Basically, they estimate that Vodafone's spectrum dues that are payable over FY26 to 28 could reduce in the next 3 years or so. And Citi has also retained a buy call on the counter with high risk rating and shared a target price of about 12 rupees per share. On the other hand, if you look at Macquarie, that has retained a neutral call on the counter with about 7 rupees target price. Besides spectrum dues, we also has to repay about 16,500 crore rupees annually pertaining to AGR dues, which are not part of the proposed conversion. So Motilal estimates that Vi's cash flow could be insufficient to funding its ongoing capex plans, which combines along with your AGR dues too. Yatin, from 22 to 49% stake of government, the stock is nearing a PSU stock status, and the street definitely cheered this move. But gaining back subscribers and peers like Bharti Airtel having a superior cash flow, that is still a key overhang.
Yes. So two things, Lovisha, that investors need to know, especially the retail investors, because equity dilution is not good. It is as good as having more slices on the pizza and having a lower share. Equity dilutions works that ways. But the relief part is that almost 40,000 crores of government dues get converted into equity. So the balance sheet, becomes slightly better. However, if you look at the cash flows, the earnings per share, whatever management promised during the FPO time has not really got delivered yet. So we don't know how really does, Vodafone Idea really ramp up the operations, especially in the 4G and 5G scale. Also, if you look at the subscribers, how, subscriber addition moves forward, how does the ARPU, which is the average rental per user or revenue per user moves, is something important we will watch out for, because one tariff hike probably is not sufficient for Vodafone to make profits or at least manage to stay afloat. So very interesting times, and as you mentioned correctly, almost nearing a PSU status, with the government trying to hold to that 49% mark. And if they cross 50%, probably it would mean a PSU status. We don't know the technicalities, but yes, an interesting day for Vodafone Idea.
Yeah, definitely. But the next stock in focus, that was your Hindustan Aeronautics, because the stock did rally up to 8%, but ended with about 1% gains. The gains came after it secured 2 contracts, which was worth about 62,700 crore rupees from the Ministry of Defence. Now, the contract is for the supply of 156 light combat helicopters to the Indian Army and the Indian Air Force too. Now, UBS called this order quite a positive surprise, both in terms of value as well as timing, because they expected this deal to get cracked in the first quarter of FY26. Now, the brokerage also highlighted that the LCH Prachand will have 65% indigenous content, which further strengthens India's domestic defense manufacturing ecosystem. UBS has noted that HAL did end FY25 with a strong beat on orders, and they expect that the next financial year, which is the current financial year, is to be an inflection year for defense ordering, driven by accelerating decision making. UBS has revised the target price to about 54.40 rupees per share for HAL, which implies another 20% upside from today's high level too. Yatin, now very bullish sentiment coming in for HAL, given that the stock has already risen about 40% in the past 1 month.
Yes, not only that, the 52-week low recovery also has been quite good for other defense stocks. Now, the best part about HAL is that the order visibility is now fully under, the control of the management. Now, execution will be key. A few weeks back, we saw the company bag the light combat aircraft Tejas orders. Then, we had the light combat helicopter Prachanda orders coming in. Not only that, last week update also said that GS started delivering on, the 404 engines which are supposed to get fitted in the LCA Tejas MK1 version. So things are doing better. The bottlenecks or the supply chain issues are probably behind us, and from here on also brokerages do believe that there could be some significant upside given the fact that the order book provides strong visibility for growth as well as strong momentum in the coming quarters. But from domestic stocks like Vodafone and Hindustan Aeronautics, let's talk about pharma stocks as well as the entire healthcare space. There has been concern regarding Trump's pharma tariffs, because Trump also mentioned that the healthcare as well as pharma sector should see some action, and he's willing to put that extra tariffs especially on India pharma exports. Especially talking about pharma stocks, Macquarie believes that there is no chance or a low probability that Trump administration might put tariffs on pharma, because India is one of the countries which provides cheaper or affordable healthcare products to the US, be it drugs or be it medical devices or various other products related to the healthcare segment. In fact, Macquarie believes that the hospital businesses which are doing large capexes are not attractive, and any dip, especially with the top pharma companies, should be used as an opportunity to buy. They like whole host of stocks from the large cap pharma space, be it Sun Pharma, be it Lupin, be it Dr. Reddy's. However, they are slightly cautious on names like Apollo Hospitals. But as mentioned in the opening comments, tomorrow post the market hours, Trump will unveil those tariff orders. Whether or not he is lenient, whether or not he will defer it, we don't know. But yes, the market, especially the pharma stocks, are really concerned. And ahead of that, we had most of the pharma stocks trading almost at the day's low today.
That's right. Pharma and of course IT, also one of the export-oriented themes, could face the heat of the tariff heat. But let's move on to another stock in focus, that is your Trent. Now the stock was the top Nifty mover of the day, and the gains came in after the company announced that it has crossed operations of 1,000 large box fashion stores. Now this 1,000 figure also includes about your 248 West Side stores and 757 Zudio stores. So good store addition and expansion strategy which is laid out by the fashion retailer. Few days back we also saw Macquarie initiating an outperform rating on the counter with about 7,000 rupees as a target price, which implies another 20% increase from today's high. Now what Macquarie highlighted is that the company has been outperforming its Asian peers on three major parameters, which is growth, return profile and inventory turnover. Also, the brokerage expects this momentum to continue, given that the company's integrated back-end operations would enable faster fashion-forward style drops and eventually support profitability. Yatin, while we have Macquarie giving a positive outlook, Kotak also had assigned a reduced rating on the counter. They expect more EPS cuts to occur in this financial year, and given that Reliance is relaunching its Chinese fashion brand, Shein, the pressure could stay on this counter to prove its valuations.
Probably yes, but Lovisha, we don't know how Reliance launches its Chinese fashion JV. Will it be only e-commerce or will there be stores? If it is online, probably there won't be an impact according to analysts. But yes, Trent, phenomenal run for the past 5 years, a solid group company from the house of Tatas. Today, if you look at the front pages, they said that they have opened 1,000 stores. And they are still hopeful that the entire financial year of 26 they would be opening and recalibrating old stores as well. So it needs to be seen if urban consumption is slowing or if fashion is slowing, particularly in the urban markets or probably the tier 2 cities where Zara as well as West Side are making their own footmark. Zudio is also doing well in smaller cities. However, valuations remain stretched, and that is the only talking point that brokerages have. However, the company with its superior growth and margin trajectory has seen a re-rating at least for the last 2-3 years. Whether or not it continues is something we'll watch out for, especially in the quarterly numbers as well as the management commentary. But yes, the brokerage reviews on this counter are quite mixed when it comes to the buy or sell recommendations.
That's right. All right. So the reciprocal tariffs, that is the big headline, and that is something that we need to watch out tomorrow too. We'll have better clarity on this, and the markets are also going to react to it. But with that, we have come to an end of this edition of Closing Bell. It's a wrap from Yatin and me. Do stay tuned to moneycontrol.com.